What is going to happen next year? What's going to happen to earnings? So, as I usually said into this channel, is that what we want to do is we want to understand what drives stocks. And what I always said is that, frankly, you've got two stories out there. You've got the credit story, and you got the price risk, the credit risk and the price risk. What do I mean by that? Well, first of all, we have to assume that the way a stock moves, it because based on expectation of earnings, right? Because you have no earnings, you have no stock price. Well, I guess that means that if the earnings keeps getting better and better and better, then the stock should be doing better and better. As we've seen, that is not always the case. Anyone can say Nvidia is doing fantastic if you think about it. But yet, we have seen some lots of disappointing stock performance. Tesla, for example, is a case in point where the stock is doing great now, but before it wasn't doing so great, but yet earnings were doing fantastic. So what's really going on here? Well, I mean, I don't have time in one video to deal about everything, but in this video, what we're going to do, we are going to be focusing very simply on the earnings. After all, what are the expectation in this market? What are the expectation in terms of earnings for the S&P 500? And that's exactly what we're going to do, because I'm going to show you later on what it means to be able to make money in the stock market. And frankly, what you want to be able to do is that you want to know what the earnings are going to be. And frankly, and I'm going to show you the screen in a few minutes, frankly, you're going to be surprised. You're going to be surprised to see that, you know what, earnings are pretty good. Now, when I say earnings, the S&P 500 is 500 stocks. That's a lot of stocks, right? So what we want to do, we want to focus on to, well, which industry is going to do well, what we should be focusing on, where is the growth coming from. Let me share my screen with you. This is the earnings report. Well, it's actually based on the fact set and what the S&P earnings and revenue growth from 2014 and 2015. Now, you need to realize that what this means is that analysts expects the S&P 500 to report double-digit earnings growth in 2025. Now, that is significant. That is significant because we are growing. We do not have a recession anytime soon. The estimated year-over-year earnings growth rate for the current year 2025 is 15%, which is above the trailing 10-year average, which has been 8%. So, in terms of earnings, okay, I know we had some issues because of what Powell said, but and this is really focusing on the price risk. But this time we're not focusing on the price risk. We are focusing on the credit risk. It is interesting to note that analysts believe earnings growth for companies outside the Magnificent Seven will improve significantly in 2025. So when Magnificent Seven are basically we're talking about Apple and Tesla and all that, and Nvidia. We're saying, well, sure, but what about the other guys? Well, if you look at the analysts that are following the company, analysts expect the magnificent companies to report growth of 21%. They expect the other 493% to grow by 13% for 2025. This 13% earning growth, and this is where folks, where you have an advantage here. The 13% growth right here, the 13% growth for current year 2025 reflects a substantial improvement to analyst expectation, just over 4% earning growth for this same company for So in 2024, forget the big seven. The rest of the companies last year at 4% earning growth expectation, but now they're expecting 13% for. There's going to be a lot of companies that are going to be growing that you haven't heard of. All 11 sectors are predicted to report year-over-year earnings growth. Now, remember when we say who are these analysts? Well, these are people that are following the stock, and they're basically saying that I think that these companies are going to do great. Six of these sectors are projected to report double-digit growth. Obviously, we have information technology. Obviously, we have healthcare, industrials, materials, communication services, and consumer discretionary. So, in terms of revenue, so if you're looking purely revenues, because before it was earnings, earnings per share, which is the bottom of the income statement, the estimated year over year revenue growth is 5.8%, which is above the. So, even for growth in revenues, that's also above average. 10 of the 11 sectors are projected to report year over year growth. Now, obviously, you could be making lots of money, right? But if you have lots of expenses, then at the end of the day, your earnings per share is not going to grow. So not only we're saying that earnings per share is going to grow, but obviously the revenue themselves are also growing. So what does it look like, right? What are we talking about? Well, if you look at this chart, the S&P earnings and revenue growth from 2014, as you could see, we have 17, 20, 25, you see, earnings 14%, which is here, and revenues 5.9%. Okay. How does this compare with historical? Well, look at it yourself. Remember 2020? That wasn't good, right? Well, obviously it was COVID. And then we grew a lot because what that was the year after COVID. Obviously, we had to make up the difference. But since then, we've gone kind of look at this. I mean, if you want to buy stocks based on earnings, you should because it's both gonna. We have some good strong expectation. S&P earnings growth year over year. Look at this from 2024 and 2025. Now, obviously, the Magnificent Seven are growing still, although less. But look at the other box here. These are the non Magnificent Seven. They're going to grow a lot. Out of that box, we also have small companies. And remember, there's this topic of the rotation trade. When are we going to rotate in the small companies? This is it. This is it. Look, 2025, they're going to be tripling. There's a lot of things happening here, people. Okay. Now, which industry? Well, which industry? Obviously, it's technology, it's healthcare, it's industrials, and material. I mean, it's across the board, really. Revenue growth, it's also across the board. Again, technology is going to be driving it. Okay, so we've got some interesting situation here. Now, why is this interesting? It is interesting because we've been talking about the rotation trade. We've been waiting for the rotation trade. I mean, don't forget, I have been talking about, and we'll talk about it later on. But I have been talking above or more and more and more about the rotation trade with names like GCT, right? Small company, very small, tiny PE, less than $2 billion in market capitalization, but nobody's paying attention. Why is that? Well, that's going to be a different discussion. The discussion having to do with the price risk, right? Well, what moves the prices? That's a different topic altogether. They have their own sense of movement. But the point is that if you look at earnings alone, we've got some good news for 2025. So if that translates, I know that the discussion has been around a lot. Has been around, are they going to lower and raise the rates? But if you think about this, does it make sense to talk about things like that? Does it really make sense about things like that? because they cut the rates twice, or they're going to cut the rate twice. I know they said four, then it's two twice, and the market lost 1,000 points. But why? Why are we doing this to ourselves? There's no reason. There is no reason, because we're going to make those companies I'm showing you before, and review the video. And don't forget to subscribe to this channel, and don't forget to like this videos. But basically what we are saying is that we are going to have earnings growth, and earnings growth is very important, and you're going to have it. So at least at that level. Now, of course, what moves stock prices? It's expectation, right? There's a lot of difficult discussion to be had around what is the price risk. I mean, look what happened to Tesla. Tesla was doing fantastic in terms of its products, except that there was no focus on the company at all, and they felt that he wasn't focused enough on the product. He didn't give us information. We got killed, literally. We got killed during the robo taxi event in October, and here we are at the end of the year with the price, the stock almost doubled. Why? Well, because now he's closer to Trump, and we feel regulation is not going to be an issue, and he's going to come up with a cheaper car, and the regulation are not going to be an issue. Therefore, he's going to be able to release this full self driving and having the robot taxi. But we haven't seen anything yet. But yet the company's been earning all along. So it's not that they. But yet nobody. Why? Well, that's a big question. What drives stock prices? That's going to be a video from another time. But right now, I could tell you that as far as earnings are concerned, you should not be concerned. Not only of the Magnificent Seven, obviously, but the other non-Magnificent Seven, they will have earnings growth. They will make money, and we will not have a recession. Therefore, what is it to worry about? Everything is going to be fine as far as earnings are concerned. So do not panic for 1 second, and make sure you know what you are buying.